Hello, mate. As requested, today I'll go through the fixes. Um, there are two types of fixes. There's one that occurs in Tokyo time and one that occurs in London time. The Tokyo fix occurs at 9:55 a.m. Tokyo time until 10 o'clock Tokyo time, and it calculates the mean value of price during that window. The London fix occurs at 3:59 and 30 seconds London time, PM, to 4 o'clock and 30 seconds PM London time. So who calculates them and why do they calculate them? This company here, Refinitiv or Refinitiv, is owned by Thomas Reuters, and they have been performing this calculation for a very, very long time. Why are they important? Well, if we just go in here, so I know you're a man who likes his data, and this website here, just so you know, will give you all the information you really need on it. It also gives you the main benchmarking services. But why is it important? Well, with those particular rates, essentially what happens is they're used by a lot of financial institutions. For example, they're used for settlement of financial contracts and FX-based derivatives. They are used for measuring portfolio performances. So basically what that means is things like exchange traded funds and everything have to rebalance their portfolios based on their rate. They're used to value investment funds. They structure investment products. They're also used for spot trade execution. So what does that mean? Well, let's say you're a large company and you have to do transactions at a certain, well, every day basically. So, you're Coca-Cola and you have to send money around the world every day. You don't necessarily go to your bank and say, let's manage every individual transaction. You say, I want you to execute all my transactions and I want you to execute them at this agreed benchmark, the London fix. Okay. So what that means is the banks are basically going to wait for the fix to be calculated, and then they're legally and contractually obliged to operate for Coca-Cola or to any company, like all the big companies, at that certain price every day. And it's the same with Tokyo. It's also used for reporting and analysis and research, and it also forms the basis that the banks will deal with each other at specific times during the day, which does go a little bit into your discussions about settlement. However, certain transactions can occur at this given price. So every day those prices are calculated, and the main point I'm trying to drive home is that the reserve banks who adopt this methodology and also require that banks use it, it's in their interest to have the price at this particular rate. It's in the bank's interest to have this at their best, at this rate of return. And the reason why it's important for them is they have contracts with their largest clients to execute trades at that volume. So if they can't really execute them at those volumes, well, the banks essentially take a loss. And it's also in the client's best interest because they've got an agreement to deal every single day at a certain rate based on a certain time procedure. So how does that look in the real world? Well, let's go to our trusty strategy tester. We'll do the Australian dollar. And I should point out it's not perfect either, but it does give you a very good frame of reference as to where the market is going. So the blue lines that I'm referring to is the Tokyo fix, and these little dotted lines here, that's the London fix. So, and it's just basically a couple of lines that get drawn up on the chart. But if we have a look at what happens here, let's zoom in a little bit. Here you have the window where the price was calculated and little blue line is drawn out here. So this is when it was calculated, and this is the actual market open. So if you haven't seen enough business done like within this range, essentially what it means is there's open orders that are required to be filled. So this is where I'm saying it's in the bank's interest to take the prices back down there. It's also in everybody's best interest. So essentially what you will see is you get a pull away from this figure and you'll come back and you will return to it. Now, at this point, you can see that we have orders above the line and below the line, and that's probably enough to allow people to get out of their particular trade. But it is a very, very, very common occurrence. Some days it might not go near it. If there's a big news event or something, they can actually change how they actually settle on the rate or how the rate is calculated. But you're going to find that they're important zones and price naturally gravitates towards them. And over time, they always get filled. Even there, as you can see, this here was the Tokyo fix from the prior day. Price comes up, comes back to the Tokyo fix, comes down, reacts off the New York fix, comes back down. And what happens when it gets back to the New York fix? Well, it reacts. But as I say, it's very much a magnet for the markets. So let's have a look now. Here we've had a fair bit of business around here, so you'd assume that most people have gotten their orders away, but we normally do give it a few tests. So as you can see, we're really interested in when there's not enough business being done. So here was where it was calculated. Here goes the price. We're not doing any, you can use any entry setup you like, but as you can see, the price naturally gravitates back towards it. And it works on all assets because it's calculated across all major foreign exchange pairs. If one is missed, you simply mark it off because within the next couple of days, it will definitely return to it. So we don't really use it for entries, but we do use it for an understanding of where the world economy is trying to drive the market. So we'll just do a couple more. Oh, sorry. Here we had the London fix, price pulled away from it. People have very vested interest in making sure they can get business transactions done at this line. So you can see the price does return to it. If they've still got orders to fill, they'll take it back down. If not, they will push it again. So what did we see here? Here we have the 955 Tokyo fix, price came to it. Price pulled back to it, still could actually get enough transactions probably done at that business. You really want to see it done above this line. So that's a pretty good indication that price is going to go back up and allow it to get filled. There you go. As you can see, horrendous downtrend all day, but what are we trying to do? We need to go back and put some orders in above that line. Otherwise, the banks are lying. Sorry, not lying, are losing, I should say. And generally, this just occurs over and over and over and over and over and over and over again. There's so much vested interest and so much money being calculated off this rate. It's in everybody's interest to make sure the price goes there. So that's why we use it. We'll do a couple more just to ensure that you've got the hang of it. So we'll wait. Here we had the fix for London. Did a lot of business off there. Probably some days it doesn't give you much opportunity. Like I say, you had the fix, you pulled away from it. You only had 4 pips, but on the pound or the euro, you might have had significantly more. Here we have another example. We have the fix, we pulled away from the fix. The market comes back to the fix, spends a bit of time there, gets everybody's orders away, and we keep going. So yeah, if you've got any specific questions, let me know. You can also go onto all the central bank websites and research it. They all make reference to it. They all use it themselves for various calculations and statistics. But as you can see, they're just very, very price sensitive. There you go. Let's do another one. Very, very price sensitive pieces of information. So here's a good example. Here you had the fix. You haven't had enough business really done at this level to justify the trillions of dollars of transactions that are required to occur. So that's why you see a pullback straight to that rate. It's a good little way to put some money in your pocket on a daily basis, because you generally know with a fair bit of certainty that these prices get tested over and over and over again. Oh, there you go. There's one. We had the fix. We pulled away from the fix. We come straight back to the Tokyo fix. Anyway, mate, I hope that that answers all your questions, and congrats on your progress. Great to see you pass that challenge. It's awesome news. And I hope you have a really profitable week next week. Thanks, mate.